Then you have my enterprises in the private sector who have the same issues. They're like, why would they get access to my data if they're going to build my alpha? Why wouldn't I control the weights? Why wouldn't, and that's where you get this partnership. What aligns me with NVIDIA, and I think is what the technical customers want, which is control over their compute, their models, their data stack, and their alpha. They want to know they own the means of production. It's not being transferred to someone else. They're not interested in some fake deploy co that somehow is deploying tokens that transfers the alpha to a third party. And the jig is up. And so we have to figure out a way, our products are agnostic. We now sell a product to customers that allows you to switch from model to model and we're completely agnostic. But we need to rebuild trust. And that trust is going to happen where everyone gets to ask and answer basic questions. Who owns the data? Where is it cached? Are the prompts secure? Is this being transferred to you? Are you being okay, if it was so valuable, let's say I can make you $1 billion tomorrow. Wouldn't I say, I'll make you $1 billion and I want 30%? Why are they charging for tokens if it's so valuable?
So then, Alex, if the key, from what I'm hearing you say, is a secure, American-born, open-source model, how quickly can your model compete with the frontier AI models in terms of reasoning and agentic AI tasks?
Okay, what I am claiming, obviously slightly true but slightly self-centered, is it's the model plus an application layer plus compute. It is really all three. So in our jargon, it's the value, the reason, okay, just look at our financials. The reason why everyone is chillaxing with bad financials and growth with losing money is the client refuses to pay the true cost. The two places that actually make money, like profit, free cash flow, are our application layer called ontology and compute. Okay, what I am not just claiming, we can take an open model and in the classified or non-classified context, get it to the point of a frontier model, but you control the weights. So what is the true cost? Not just what you're paying. The true cost is is what you make minus what you lose, meaning the value of your business. So we can get the frontier application to be exactly the same as a frontier model without the risk of transferring the alpha of your business to another.
All right, guys, welcome back here to the channel. That was Palantir CEO Alex Karp says that enterprises want to, quote, own the means of production instead of transferring their alpha to OpenAI or Anthropic. We're here to talk about Palantir stock. Now, listen, we cover everything in the AI realm. We do not leave any stone unturned. And the way I look at things is strictly from an opportunity basis. And when I'm looking at Palantir stock, it started the month, you can see from that screenshot from the video, it was down pretty significantly to start the month of July. We were down less than 120. We have been bouncing here over the last week and here pre-market up a little bit, but we're starting to see some rebound here. As you can see from the lows of June 25th down at 107 and some change down here. We're starting to build back up slowly but surely. And Palantir to me is starting to become a little bit more interesting. If you zoom out to the 5-year and even the max chart, you can see here we topped out in October of last year. Our 52-week high is 207. We're down to 130 right now. We came down to 115. But I like the bounce that we're seeing right now. I still want to see a little bit more, but I am getting closer and closer to maybe making a play on Palantir, and we'll get into why in this video. So this article came out early this morning. Palantir stock down 36% from its all-time high. Is it time to buy? I like that it's pulled back the way it has. Shares trading near 132, below their 207 52-week high. But it comes at a time when the business is firing on all cylinders. In fact, Palantir's revenue growth rate has been accelerating in recent quarters. Even more, profits are soaring. Is this a buying opportunity? There's plenty going right. Palantir's first quarter revenue rose 85% year over year to $1.63 billion, the fastest growth in the company's history as a public firm. So when you look underneath the hood, things are looking pretty solid here. But that wasn't a one-off. Growth has accelerated for several quarters as demand for its AI software has taken off across both government and corporate customers. The United States commercial business, the core of the bull case, grew even faster, jumping 133% to $595 million. Total U.S. revenue more than doubled. Palantir's story is no longer just a government one, and that diversification is exactly what supporters want to see. This is what I wanted to see. I wanted to see more growth outside of just the government, right? And this isn't growth bought at the expense of profit. Palantir's net income was $871 million in the quarter, 53% net margin, while their non-GAAP adjusted free cash flow reached $925 million and adjusted operating margin hit 60%. There are a few software companies at this scale that are growing this fast while throwing off this much cash. Management raised its outlook too, guiding to for full year 2026 revenue of about $7.65 billion. Now, we are going to be having earnings coming up pretty soon on August 3rd. This could be something very, very much to watch. Fair value here is $153 is what they're saying from some of the analysts. We're below that. So I think we're getting Palantir here at a pretty nice discount, in my opinion. And here's the thing. They just recently partnered up with NVIDIA at the end of June. So that was also a massive deal here, announcing an engine for deploying NVIDIA Nemotron open models in the United States government and critical industries. Together with NVIDIA, Palantir is enabling the U.S. government's own self-improving models and sovereignty over mission-critical AI work, where open models are essential for national security, corporate sustainability, and industrial innovation. This intelligent engine allows customers to run NVIDIA Nemotron open models in sovereign environments and with our critical infrastructure products, AIP, Ontology, Foundry, and Apollo. For U.S. government agencies and critical industries, this enables the use of open models within their proprietary landscape. Combined with Palantir's domain-optimized harnesses, NVIDIA Nemotron open models delivers frontier capabilities for specialized workloads. So this partnership, obviously huge for Palantir. There's no doubt about it. And I don't think it can be, gone without saying like how big of a deal this is. So I think right now, Palantir, very undervalued. Am I interested in the other models out there? 100%. I think there's going to be a space here for multiple winners. I think Palantir is going to be the space for the big corporations and governments. And I think that's a huge use case. And with that comes a lot of interest from some very high net worth individuals. So I look at Palantir today, $309 billion market cap and earnings coming up. I feel like they've been beaten down as part of this new AI trade and the AI build out. They've been kind of left in the dust. Software took a big hit during the semiconductor boom, and we're still going through that. But I look at Palantir and say, you know what, on the surface, I think this is an undervalued company. I think this is $1 trillion+ company toward the back half of this decade. And if I can get it here at around $300 billion market cap, I think this is an absolute opportunity, in my opinion. And so I do have exposure. I started buying a little bit more Palantir in some of my longer term portfolios as well. And I've got some exposure to it in some other exchange traded funds as well. But I wanted to make this video. I do think that it is an AI giant. I think it's just been not left for dead per se, but it's been forgotten about. Just, about the run up that they had from 2023 to 2025, just insane growth, $15 all the way to $200 a share. And now it's back down, coming down 36% off the highs. And so it says here, though, I will say this, even after a 36% decline, Palantir carries a market cap of above $300 billion against trailing revenue of about $5 billion, roughly 60 times scale, a multiple arguably no company grows into comfortably. The earnings picture is just as stretched. The stock trades at about 85 times its expected earnings over the next year. The broader market, by comparison, sits in the low to mid 20s. So Palantir traded closer to 200 times forward earnings at its peak. So the stock is only cheaper relative to an extreme starting point, not against a normal yardstick. But even giving Palantir full credit for its growth, that is an enormous multiple. To justify it, the company has to keep compounding at extraordinary rates for years and do it without the deceleration that eventually catches every fast grower. But again, if they're building in this area for governments and big enterprises, don't you think they're going to be able to continue to deliver? I do. And so it's a risk I'm willing to take, but we'll continue to track this. We are covering all things AI, all things robotics, all things space, all things biotech, all emerging tech with this AI build out. We've got it right here on the channel. So make sure you guys do subscribe and hit that like button. Drop a comment down below. Love to hear what you all have to say about Palantir right now. And we'll see you guys in the next video. Take care.